Right, in this video, we're going to talk about formulating setups. So we've actually just spoken about identifying stop loss positions, identifying entries, and identifying targets. And I'm just going to bring that all together and show you a couple of examples of actually formulating the trade from start to finish. So we're here looking at GBP USD. Now, all of the trades I'm about to show you are trades I've recently taken with my private community and trades that I've taken myself. If we look at the market then, GBP USD, we can see we are on the weekly chart. Okay, so we start off on the weekly. That's how we're going to formulate our trade. We are in a downtrend. Okay, lower lows and lower highs consistently. So looking at the more near-term price structure, we can see we've got a key level resistance, 1.330, that we've reacted off multiple times. So we know about liquidity. We know about potentially, taking the equal high points, and that is why midterm, I was actually looking towards the 1.3700 level. Now, this is important to note because although I was looking for this level to be met longer term, we need to understand that the weekly chart is not where all of our trades are going to be formulated, okay? The fact that we are in a downtrend is what is forming the trade here. So even if midterm, I'm looking for this level, I do appreciate that we're in a downtrend and I will focus on the lower time frame, the more near-term structure for the more near-term trades. So generally, the weekly chart then, the information that we have is that we are, while we could potentially open the doors for some more upside in the future, right now we are in a downtrend and we are reacting off of a key level. Okay. So scaling in to the daily chart, what we can actually see is that these higher highs and higher lows in this current leg of the trend topped out here. And we actually saw this higher low turn into a downtrend, right? We saw a higher low here swept through. And what actually happened then is we formed a lower low. So now we're coming up, we can expect that we're probably going to form a lower high and then continue to push lower, okay? So I was looking towards, in this example, this zone down here, 1.26, 1.2650, somewhere in and around this region to be filled before we then can either continue up or push through and continue lower. So that's the overall basis of my trade. Now, I said here we saw this higher low turn into a lower low. So what we can actually do is look at a key level that resonates with, okay? And the key level that resonates with the best is the 1.30 key level. Now, this is a key level that has ran psychologically for quite some time in the past. It's a very nice rounded off level. And that's the point of interest. Now, if we look at this, the daily chart, 4-hour chart, we can see it acted as support, pushed through, acted as resistance, 1, 2, 3 times. Okay, so generally we are respecting this level. Now, I know that when we are seeing all these things in our favor, we can actually then begin to identify a trade in the direction. So let's just quickly recap. The weekly chart, we had a key level resistance, which is this 1.330 level. After tapping that resistance, we had a big breakdown, which changed the market structure of the daily chart. Okay, so the higher highs, higher lows turned into lower lows and lower highs. And now we know that now we're trading underneath the key level. And now that we've actually switched from this uptrending structure to this downtrending structure, we can look for a selling opportunity. So looking at the current price then, we can see reacting on the 1.300 level, 1, 2, 3 equal highs, okay? So this whole region here has liquidity above it. So what we can expect to see with liquidity, as mentioned before, as mentioned in the technical chapters, is for liquidity to be pushed through the level, okay? And then from there, we could either expect, okay, we'll find support and continue. And in that case, we are actually bullish. But if we push up, take liquidity, and then melt back through, that tells us that this market is generally actually bearish. So we saw then the 1, 2, 3 equal highs taken out on this little run for liquidity here. Now, from there, I saw a lot of people buying the market, and this is where we are actually able to beat most people because they're going to be buying into this trap when really we know that this is a liquidity run and the market is going to tumble as fast as it actually bombed through. So after seeing the market tumble back through, this gave me the confirmation I needed to see that the market weakness was still here. Okay, so recapping on the confluences so far then, we've gone from the weekly key resistance to the daily market structure. Okay, first thing to note is the market structure is always very, very important, focusing on the highs and lows, see how they react to each other. Most notably, the daily chart, seeing this big shift down does actually put my mind into a bearish sentiment. So the liquidity was filled. Now, from this point, Had we actually gone and closed higher and continue, we could look for continuation, okay? But because we actually closed all the way back down here again, that showed me that this simply was a run to fill short orders. So we've come back down, and now I'm thinking, right, this is a good place to begin identifying short trades, okay? So the confluence here on the 4-hour chart is that we've done 1, 2, 3 equal highs, and then we've swept for liquidity and then slammed all the way back down again. So this shows me liquidity has now been filled and the market could very well be ready to push to the downside. So we have that overall downside target, 1.2600. And we also have a couple of other targets in focus, okay? Now, the thing is, when we are taking trades, as mentioned before, we do need multiple profit-taking levels because the market is not always going to get where we want it to be. So we look to take profit at logical points, and we will then actually either ride it out all the way to take profit and win a huge amount of money, or we will take small profits along the way, and if the trade reverses on us, we'll still make some good gains, okay? So looking here then, what can we see? We can see multiple lows all around an equal point. So we know there's liquidity in here. We've got a price imbalance which takes us into a key level at 1.277500. We also have, just above price, a supply zone. So all of these things we've spoken about, okay? All of the things I've covered so far. Now, if we look at the 4-hour chart, we saw a great reaction on the 4-hour, tapping into the supply zone and then actually pushing bearish. So this, for me, was a very nice indication to actually go short. So we've seen the push down, we've seen a supply zone retest, and we now have our downside targets. Now, one thing I also noticed when I was looking at this is that the 1.290 key level is just here at the bottom of this one movement, okay? So what this tells us is that this is essentially quite a strong support floor. So if we trade into this level, we are going to have to take some profits, quite a lot of profits, in case the market forms reversal, okay? So scaling it to the hourly chart, I actually took my entry off around this point. Now, hopefully you can see why. We've seen that supply zone, big push to the downside, showing that there's strong bearish momentum. We traded in, we instantly rolled over. Now, what can you see here? A multitude of the things we've already spoken about, okay? The Japanese candlesticks, a bearish pin bar, right? Bearish pin bar where we pushed to the top of the zone for liquidity, and then a bearish engulfing candle, which came straight off that pin bar. Now, for my actual position, that was the trigger point. That's where I entered. Another great place to enter would have been here, which shows a secondary breakdown of the market. But this is where we got in, so that's what I'm going to show you. Now, when I chose my stop loss, I went for a 50 pip stop. Now, what did that do? That covered the highs, just over the highs of this and this. Now, I knew if the market can get into this point, chances are, after forming this bearish engulfing, if the market can get into this point, chances are we are probably going to go bullish and take out this high. So that's a good invalidation point. Okay, so to identify the entry, we used all of those confluences. We used the fact that this market has now started breaking down. Now, if you compare it to the most recent market structure here on the hourly, it has actually made a new lower low. Okay, taking out this level. We know that we, of course, have got the liquidity, all those higher time frame confluences we've spoken about fulfilled. And then we know here on the hourly chart, we have that bearish engulfing, we have that bearish pin bar, confirming our trade entry. Okay, so we went and took the trade, 50 pips stop loss. I believe it might have been 48 pips, but anyway, we'll call it 50 pips stop, just generally showing you how to formulate a setup and how I would go about doing it and how I have gone about doing it in the actual live markets. And then we simply set and forget the trade. Now, the first target was always 1.2900, okay? Now, I risk 2% on a move. So 2% risk, 4.8% gain if the trade comes through. So we then, of course, have got the extended targets, and we'll see how the market reacts when we get there to see if we want to hold them or not. So the next thing to do is simply to set and forget your position and allow it to run. As you can see, this trade broke down very quickly, and we actually went and traded into that first target. Now, I did see some fast reactions, and seeing these reactions actually led me to take the profits, okay? Now, I did think I'll take some and leave it on, and that's what I did. I took some on a Thursday, and I left some of the trade on, okay? And what I actually did was hold it, and I was planning to hold it for longer, but when I saw all these reactions around the level, it did make me a little bit wary of holding this move long term. Now, what actually happened then was we hit the weekend, and just before the weekend, I decided to take 135 pips on this movement, which was around this point here. Now, it's a good job I did that because after I took my 135 pips, the market then went bullish and actually took a bit more upside and gave away some of the profits that I went for. So that is an example of a formulated setup. Okay, now start to finish, a realistic example in the market. I mean, it is a real example in the market that I took not that long ago. So let's just recap it then. We used the weekly resistance to start us off. We first of all found the overall trend, which was a downtrend on the weekly chart. We then found key level above that acted as resistance. So then we scaled to the daily chart to have a look at structure there. And we noticed that the daily structure had turned from an uptrend to a downtrend. So we knew then we wanted to look for a selling opportunity in line with the trending structure and in line with some key levels. So we had that nice 1.30 key resistance above, which we'd seen 1, 2, 3 equal highs upon. And then we actually saw this run for liquidity, which is this area here. Okay, we've spoken about liquidity, the market pushing in to fulfill orders, ready to actually dump all the way back down again. So that came through. The hourly structure showed me the clearance of these recent low points and the formation of a new lower low in the market. So when we actually saw a retracement back into this zone, I was very interested in the supply zone in that original area of liquidity. Saw a bearish pin bar and a bearish engulfing candle, and that was it. I was straight in, stop above the high, double confirmation there with that pin bar showing rejections and the engulfing showing a clear shift in momentum. Okay, 2 candles engulfed. We sold into the market, stop over the high, stop over the zone, and we rode this thing down. Now, this is a great example because we closed this early, okay? I closed this significantly earlier than my original long-term targets. Now, the importance of mentioning that is early closures are sometimes okay. Now, the reason I closed this, the market was stalling. We were hitting Friday. I didn't want to get caught in a reversal. And I also already had a great profit on the table. Now, that's one of the important things, okay? If you actually are early closing trades and you don't have one-to-one risk reward on the table, that is going to ruin your strategy. Now, we spoke about that risk versus reward, and you can't actually win long term if you're taking trades that win less than the trades you lose. For example, had I actually taken one-to-one, okay, let's just talk it through. I risk 2% on a trade, so there's 2% risk on there, okay? If I take 2% profit, that's okay, but next time I take a loss, that's completely wiped clean. If I take under 2% profit, then next time I lose, I'm actually down, okay? So it's never really okay to early cut your trades under one-to-one risk reward. Generally, not even under 1-2 risk reward, unless, of course, there's a really valid reason to get out. So, taking the profits where I did, at around 135 pips, did actually leave me with just over 2.5 risk reward, okay? Now, what that means is that gives me 5%, okay? So 5% profit secured. And then if I lose a trade, I've still got 3% profit. If I lose another trade, I still have 1% profit. So when it's a move like this and we have a real valid reason to get out, for example, the key level and demand zone that was really maintaining price, and the fact we were just about to go into a weekend where we're prone to actually market gaps and reversals going into the new week. When we have valid reasons like that, and the risk versus reward is already great, for example, a 2.5 risk reward trade is already a brilliant trade, then we can happily cut the profits and accept what we've worked for. Does that make sense? So hopefully you get that a bit more now, all right? Right, so that is the first setup. That's GBP USD. Great example there of an early cut trade, but one that did work out spectacularly. Now, if we actually look at the market, as you can see, it did go take those highs. So I made the right move getting out at 1.29. And that's another thing. You need to be ready to act and ready to react when the market is telling you something. So that is GBP USD. Now I'm going to just shift over to GBP AUD. I'm going to go find that setup in the backtested price data. And I'm going to show you an example of another trade on there, okay, which was a take profit trade that went all the way to our intended target. So a few different examples here. Right, so here's the GBP AUD example. This one was very interesting. This is a good setup to show you because it's actually quite different to the one we just spoke about, okay? So this GBP AUD example, I took the same week. This was my favorite trade of the week. Pretty insane. You're going to see why that is. GBP AUD then, it was taken Friday at around 12:30, just after midday. The idea behind this trade was shorting down to a support point. So I'll get to that now. We'll start on the daily chart and I'll show you where we're at. So daily chart, we are in a downtrend, right? We can see we've come down, lower high, lower low, lower highs. That's what we're forming now. Now, Big thing that strikes my interest is this supply zone. Huge drop off there. So this is definitely an area to mark out, okay? Big area. Now we can see then the daily chart was being maintained just underneath that supply zone, that support point. We can see these big wick rejections as well. Now this generally leads me to actually look for a push to the downside. Now, one thing I will say is we had a big number of equal highs forming in the market. Okay, 1.840, we can see 1, 2, 3 equal highs. So I didn't actually expect this market to come all the way down from here. Now, the reason being we've got liquidity over those levels. Okay, liquidity, very important, always mentioning it, but it's because you always need to keep it in mind. Not thinking about liquidity is actually going to leave you getting burned a lot more than you need to. So, liquidity over that level, but we've got a supply zone. We are in a downtrend. We know that we can at least get some form of short-term selling opportunity, right? The confluences are in our favor. The only reason that we don't want to try and swing it all the way down is because we actually do have liquidity over this level, which generally will need to be filled before we push down. So remember those equal highs and remember those equal lows, and remember to always keep them in mind. So scaling it down then, 4-hour chart. We can see here then on the GBP AUD chart, the 4-hour chart, generally a big bundle of equal highs, resistance point, resistance point, resistance point, key level 1.8150. Okay, so that is an area of interest for me now, and of course, while we are in and around the supply zone point, this is also an area of interest for me as well. So as it stands right now, I don't have any reason to sell the market from what I've currently seen. However, the daily confluences do suggest that we could push to the downside. So the reason this is an area of interest for me is because it's been a key level. Okay, so we know key levels are magnetization levels that price is normally drawn towards, and it's also been 1, 2, 3, 4 times reacted to. So it's a psychological level, and after actually making this bullish movement to form this higher high in this 4-hour trend, we haven't actually come down and retested any interesting areas. So scale it down to the hourly chart, and let's actually have a look at what we're working with. Now, what I saw here was, okay, we've gone for a big bullish movement. Now, what do we actually have here? A price imbalance, okay? You can see this big bullish movement with that key level beneath, and we actually haven't gone and filled through this space yet. So that's interesting to me, but are we actually ready to sell? Well, if we look at this structure here, we can see we've formed this kind of structure point where prices slowed, retested, and this is actually a nice little structural area. It can be seen better on some of the lower time frames. Should we actually drop it to the 30-minute and just view that? You can see this stalling point essentially, okay? So then we've got higher low, higher high, higher low, higher high, higher low coming in here. And then we actually saw this bullish move, which pushed through to form these new lower lows, okay? After forming this lower low, we formed a lower high. We came down, we formed another lower low, but we didn't quite go and fill that zone. We didn't quite go and trade into the 1.8150 magnetization point that I wanted to see traded into. So I know now we've breached this lower time frame structure. We are in that supply zone still, okay? We are in a downtrend still on the daily chart, so we have the higher time frame confluences stacked in our favor. And I know now that I want to sell this market if the opportunity arises. So that's kind of the move that I'm looking for. And to do so, I'm going to need to find some form of key resistance point. So we look towards the supply zone above, which is essentially this whole big region here, where we have all this consolidation. And then if we look at the closest key level, we of course have got the 1.830, sorry, at the top, and 1.82750. And those are the two major levels in and around that point. So if we can trade into this point, after seeing this structure change to the downside, if we can trade into this point, we could probably then see a push down to bring this into our target, that 1.8150 magnetization point. Okay? So we allow the market to play out, allow the market to do its thing, and now I'm going to bring it down to the really low time frames because this was the beauty of this movement, and that is why I'm showing you this move as well as that GBP USD move. So if you remember on the GBP USD trade, we never actually dropped lower than the hourly chart. We started on the weekly, we executed the trade on the hourly. Now this is a good example of a more scaled in trade, and this just shows that the things I'm teaching here do work on all different time frames. So we saw price trading towards the 1.82750 level, and this is where I actually went in and shorted the market. Okay, now we'll see 1.82 750 selling point for this market. Now let's just watch it and I'll show you exactly how the trade formulated. So we saw then the bears come into the market. The bears became pushing in, and we actually saw this structure point here give way. Okay, so this is how we bring it down to the lower time frames. So the zone was traded into, but that is not alone a selling opportunity because we haven't had any structure confirmation. Does that make sense? So here's the supply zone. We push back up, we tap into it, and yeah, we have this kind of bearish engulfing, but we're very low time frame. We are still, if you look at the near term structure, higher highs, higher lows, higher highs, higher lows, higher high. Okay, so what we needed to see was actually a push through the current trending structure. And as you'll see, these two low points here gave way to a new lower low in price. So from here, I actually went ahead and used a sell limit order. The reason being is because we are low time frame. We need to be ready to execute. The confluences are there. The information is there. We are ready to go on the trade. And what we can actually do then is keep stops above the high and go in for a move. Okay. So we went in with a 35 pip stop loss, 125 pip target, sell limit here. So what's the sell limit here? Well, it's a key level tap. We've got, of course, this supply zone after this new structure was formed. And now we know if we can tap into there, we're likely to get a fast reaction to the downside, push through that liquidity and target that magnetization point that we were looking for. So allowing the market to play out then, patience is key. We were triggered in and bam, look at that. Straight away, absolute perfection. Precision straight into that level. Literally 3 minutes, 7% profit. An amazing movement. And this was drawn by some news being the catalyst for this. But news is priced into the market. Okay. Basically, news pushes markets nice and quickly. If you get the analysis right, news can help you a lot. Now, news should not be traded. This wasn't even a major piece of news. This is simply technical analysis in line with some pushing catalysts and pushing fundamentals. So, hopefully you've enjoyed this breakdown of this setup as well. A whole different look on the market to the one we just did. Very different setup, nice and low time frame, actually running this essentially counter trend on the lower time frames and just looking for a quick imbalance fill into a zone. So that's 125 pips, 7% profit, and we secured that in 3 minutes. Okay. Hopefully that's been very useful for you. And yeah, so that's essentially the video done. We've looked through two formulated setups. Now let me just quickly break this one down for you as well. Spoke about GBP USD from start to finish. So this one then, daily supply zone, daily overall downtrend. Scaled in 4-hour chart, we saw a magnetization point, right? That 1.8150 key support. We know price we wanted to trade into there. We wanted to see that price tapped into before, yeah, we could continue from there and take out the liquidity on the daily chart, or we could push lower. But we know, for example, we know for pretty much certain that this is the level we want to target. So what we got then, scale into the hourly chart, see, is there a reason to sell? And well, yes, there was. We saw the structure had changed, okay? As we can see here, this structure point here had pushed through, formed a lower low, and then we'd actually come up and we had this supply zone as the target for our entry. So we shorted from a supply zone based on, once again, let's lower it down, based on a structural change that we found on the very low time frames, which was this point here. So we don't want to sell straight away because we're not yet confirmed. If you do that, it's very aggressive. And yes, it would have worked in this example, but there's many examples where it won't work because if you think about the near-term market structure, higher high, higher low, higher high, higher low, higher high, higher low. Okay, so selling from there just doesn't make sense in the grand scheme of things, even though sometimes it's going to work out. It can be quite a gamble. So what we actually waited for was the higher highs, higher lows, higher high, lower low. Okay, as you can see, these two lows here closed beneath with this move down. So the higher lows turned into a lower low, and then the retracement back into tap into that key level, tap into that supply zone, and tap into this new supply zone here is where we want to drive the market down from. And because of the nature of the low time frames, I went ahead and used the sell limit. Now, let me just mention, you could actually utilize the low time frames as well, like the 3-minute chart, to have actually secured an entry on this bearish engulfing rollover movement. So don't be afraid of utilizing these low time frames when it's in line with your overall analysis, okay? I am quite against the low time frames generally for actually identifying and trading setups, but when you have done your analysis on all these other time frames, you can actually get some real good pinpoint entries by actually finding the confirmations on those 3-minute, 5-minute, 10-minute charts. So hopefully this video has been valuable. Now, final talking points. When it comes to formulating a setup, just use everything we've spoken about in the previous videos. We want to identify the entry zones. We want to identify the points of interest, okay? The resistance points, the support points. We want to try and determine the trend direction. That's a big, big one. Determine the trend direction and never stray away from that trend structure across all the time frames. Now, something that's super important is if the daily structure is down, that's great. But if the hourly structure is up, there's no trade. Okay. The structure has to match across all the time frames you're going to be trading. And when the structures all align, you know that that is a good trade. For example, this one here, the daily chart was down, but the 4-hour chart was up until we actually took out the structure. Okay, let me just run through that. Daily chart was down. The 4-hour chart at this point was up. Now, over here, at this point was up. Okay, now when it pushed through that structure point there, that actually changed the momentum of the market. So then the 4 hours was down as well. The hourly chart was down, of course, as well. And when we traded back into that zone to form a lower high, that was then the area when we scaled down even lower. And as you can see, that 5-hour chart, the structure was up, okay? And then when the structure shifted to down on even the lowest time frames, that is where you get the pinpoint entries, and that is where you smash these amazing trades. So market structure, trend direction, supply and demand, support and resistance, using those 50s, 250, 750 key levels. And that is how you're going to formulate a trade. And of course, remember always to correctly position your stop loss. So over key levels, over zones, refer back to the previous video to learn more about that. Now, final pointer, can I just say the 1.8150, so looking at that 50 key level, look at the reaction it provided. And that is exactly why we target these levels, because they are the best for providing these pinpoint amazing reactions. Right, that is all for this video. Thank you for watching. Hopefully you've enjoyed this section of the course, and I'll see you over in the next video.